Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Tuesday, November 27th. And I haven't done a video in almost a week now. And what I'm looking at, I'm looking for this market to give us a test of a potential market that wants to come in. And now I could be wrong about this, but the reason why is because we finally got a test of what was support. And what should it now be? It should now be resistance. So there are actually a lot of signals in this market that are conflicting each other, and I think that's important to know. But it's also important to know, and I'm actually going to bring up a different chart so we can see it, is what we're looking at on the S&P. Bear with me 1 second. I'm not even going to pause this. Just going to run with it. All right. What we're looking at with the S&P is, here we are back at what was support back in just 1 month ago. What was support now should become resistance. So is there potential for more upside? Yeah, there is. But there's also that potential that, and what's likely in my point of view, a retest of this point of control for the year, or the value area low, or basically these lows where the market bounced off just a few weeks ago. And with the light, and this is the most important thing I believe, is the light volume that we've seen in this market. So you can see from the 19th, basically this explosion. I do think that this 11/16 day was real. That was the 505 lows on Apple. I think that was a real day, and I think that you can mark that in your calendar, in your notebook, as a very important level. But since then, volume has done all but shrivel up, and now we're back at what is resistance, or what should be resistance. And you see this light volume melt up. What it's going to do is it's going to put the market players in two different camps. One, the camp of, okay, the sellers have their chance to sell at the levels they want to sell at, so now they can put their money where their mouth is and short this market. Or you can get, and that will accelerate if there's any bad news out of Washington. Or you can get the market that says, okay, we've had a light volume melt up here. We have bounced off this big high volume area low. We are above the point of control for the year. We only had 2 days that closed below the point of control of the year recently. And now we're seeing a market that, looks like there could be a bit of rejection down at those lower levels. And you could see a little bit of chase up at these higher levels, and any dip could be a buying opportunity. And with this light volume, professionals continue to say, no, I'm going to wait. I'm going to wait until I see some type of signal to get in this market or out of it. And I'm not going to force myself in this light volume because, obviously the bigger market players are going to have to worry about fills and those bigger issues that most of us smaller players never have to worry about. But the point is, and what you're looking at is the market, okay, it's either going to sell off from these levels. Now I'm just going to highlight the high volume area just because it makes the most sense. It's either going to sell off from these levels and we're going to go retest 20 to 30 handles lower, maybe even 40, or maybe we get sideways consolidation here, and that's all the market needed, and it goes and retests what was resistance, or what was support, now resistance around 1424 to 1430 on the S&P futures. We're going to have to wait and see. Members, those who are subscribed to the SMS messages, you know where my stance is. And you know where I lie in this market. And I'll give you a hint. A lot in cash, and the idea that this light volume melt up isn't for real. And we're likely to see more downside. So I pretty much gave it to you. But members, you saw my trade, and that's the point. So anyways, risk is defined, and I think that's what's the most important thing here. looking at it from an hourly standpoint, you're starting to see this market follow through at 2:48 p.m. Eastern Time. Follow through, this was a little bit of support. This 90-day point of control ends up being resistance. The point of control for last month ends up being resistance. So we have levels to trade off of. Downside, you're looking at what was resistance. What was resistance around 1385, 1380 or so, could be support. This point of control for the month, that's going to be a target regardless, and it's looking good. The value area low. You have these levels down here, and then obviously this gap fill. That's my ultimate target, and that's what I'm looking for in this market. So we'll have to wait and see how this market plays out. But the fact that these buyers, it's light volume, and we're back at resistance, it leads me to believe that this market could take a reversal back to the downside, especially, and this is the key, if we get any negative news out of Washington. If you haven't watched my video on the VIX, just send me an email, nick@volumeprofiletrader.com. It would be worth watching. It looks like the VIX is going to try and take a trip up towards 16 to 17 again, and that's something to take note of. You have this balance range here. We're back at the top of it, so could we sell off again from these levels? Of course, but I do think it's bigger than that. I think we're going to retest higher levels on the VIX, and I think it all boils down to the euro. And the euro is selling off from the 90-day point of control, from the point of control from last month. So what I'm looking for is some type of retracement back towards 128 on the euro or so. And if we can look at this on a bigger chart, we saw a nice punch through what was support. Should have been resistance. No, it wasn't. So let's retest it. Let's see if the buyers have it. And I think that's what the sellers are about to do. They're about to try and retest about $1 lower from current levels. And then if they're successful, if they push it down and it's supported, then this could get a little interesting. However, let's look at it from a different standpoint and see. Okay, this point of control here around 130, 80 to 131. Excuse me. That is still resistance. We could at the top of the channel here a lower high here. And that's what's important. So let's keep an eye on that. I don't really draw channels, so I'm not going to try. But the ultimate thing is, if this is resistance, what we want to see is if this level here, 128.30, 128.40, is support. And if it is, it could provide for opportunity. If it's not, then obviously you're looking back down towards 127 on the euro. And just to be fair, gold, back at the top end of the range, 1725. That's your bogey, I think. That's your point of control for the year. Silver, actually this looks a little stronger. But the same thing, if you're looking to buy this, you buy it on a pullback, and you don't buy it on the breakout. Oil, this 89 level, well, I guess it's even lower, but 88.75 to 89.25 continues to be resistance. What I see here, and I'm going to bring it on a smaller time frame. I guess we could draw the highs here, and we could draw the lows. We could connect them. What we're seeing is this is eventually going to break. It sure looks like this wants to break to the downside here. If we do start to break below today's lows, then you could probably press your bets and aim down towards 86 to 85 or so, somewhere in that range. So, a trading idea, and I won't put too much emphasis into this, is, 132 by 131 put spreads on the USO if you can't trade futures. So I just want to kind of throw that out there. But overall, my overall idea remains with the markets. Here's your zone. If we hold it, then fine. We're probably going to go to higher prices. But if we don't, and we do roll over, if we break this 20-day, then we're likely to push down towards the 200, and then obviously where the volume really stands, which is around 1360. So keep an eye on that. And then NASDAQ, Let it load, let it load, come on. Alright, the NASDAQ coming down to, or coming up to, excuse me, the 200-day, the 50-day. This is what's likely to be some type of resistance. However, are you looking to buy the pullback? And I do think on the NASDAQ that this is something that you are looking to buy on the pullback. Consider, Apple. This is something that we've ridden since the lows, and not the absolute lows, but buying in the 520 to 530 range, yeah, definitely. And we've continued to see follow through. Well, now we're approaching the point of control for the year. And, the 50-day, the 200-day, we're all in that zone, and I think that's what's important here. And you want to keep an eye on it. Another name that I'm really kind of itching to get involved in, hopefully, and this is for more of a fundamental standpoint, I'm kind of kicking myself for not, getting long sub 46, but it's Starbucks, and I'm looking at, 45 on the downside, 52 or so on the upside. However, and that was, bear with me 1 second. Alright, a pullback to 48.5 or so, that's your point of control for the year. That's where we've bounced. That's what I'm going to be keeping an eye on. And if we can't hold those levels, then I'm looking to buy, more towards 47. But this may be something, members, you'll get the messages that I may want to scale into strength. So really, there are probably a few more names. Oh, Salesforce is one of them that I'm looking at. Salesforce being, what if I zoom out a little bit here? And what I kind of see is, this is really a potential for an inverse head and shoulders continuation pattern. And what it would lead you to is basically a price target of about $200. And if we do cleanly break, call it 165 or so with volume, this could be something worth considering. And I just want you to keep it on your radar. Also, U.S. Steel, this, we're getting a lower high here. The volume is definitely weak, but you're at the top end of the range. If you want to place your stop above 22 for a retest of about 20, that's not a bad risk-reward ratio. So anyways, take care, have a great one, and I'll talk to you next time.